Good morning. Welcome to the XM.com weekly market update. And we're joined once again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
All right, let's get into it. Domestically, Australian home loan figures came out late last week, and we can see by the chart
Falling off a cliff.
they are, and not surprisingly,
No.
because of the interest rate policy.
Well, exactly right. And you hear the media and you talk to the man and woman on the street, the impact there is they're feeling it in the hip pocket. And banks and their lending policies, how aggressive is it going to be moving forward? Could be a pretty tough year for property and certainly for investors and construction.
Yeah, and particularly with the expectation that rates will go up probably at least 50 more basis points.
Yeah.
So maybe a little bit more.
The inflation number really, I think, hit us all between the eyes. That 7.3, I think it was, really scared Main Street. And they're saying now it's certainly not under control. And are we prepared to hit an 8.5?
Yeah. And
energy prices are well up since we spoke. And
Yes.
just on that, we're now up 11 or 12% crude. So, is 90 going to be the new handle? Over to you, my friend.
Yeah, good man. Okay, once again, iron ore has jumped, which in turn makes the Aussie dollar jump because the correlation there is obvious.
Base metals have been outstanding, and you've looked at copper. I spoke about it yesterday. We're up $1,200 a metric ton in the last 12 days. And, that big move. So iron ore has been dynamic, and that's just been an almighty trade, the best part of 33% move to the upside, the same as silver. So silver and iron ore have been outstanding since October.
Yeah, and we've got that Aussie dollar now hovering around that 70 cent mark.
Yeah.
So, which is
China goes into New Year this Sunday. So you're in Chinatown, and we'll hear the lions dancing shortly, my friend.
We certainly will. They're getting prepped for it as we speak. So now if we move over to China, the GDP numbers came out.
Yep.
Earlier this week, 2.9%, which wasn't as high as what they were anticipating. But once again, the chart, if you look at over the last few quarters, it's picking up, but not surprisingly because of the
COVID
zero
policy.
COVID policy and whatnot.
Yeah.
But that does flow into a lot of other markets.
Well, exactly right. And I think it's going to hit its straps come mid-February. It'll start to really gather, I think, some momentum to the upside, considering first off, you've got an open door policy. Secondly, you've got the Lunar New Year. We're now really in the depths of it. So the next 2 weeks is shut down. And it'll all kick up in that second half of the first quarter, which I'm thinking should be strong. Good for Aussie, good for domestic exports from Australia into China. And thirdly, if the economies are well structured globally, it's going to be strong for energy, strong for domestic consumption in China, and we could have a nice little run up for the CSI 300.
Yeah, definitely. So Japan.
Yeah.
Activity everywhere in Japan at the moment. So just quickly on this one, we look at the bond yield. Once again, they're not big numbers anyway, but there's so much talk about what the BOJ is doing at the moment.
Yeah, Kuroda's came out. I think he surprised the market, Andrew. We were expecting it was a 45% probability. You would have seen, wait for it, 10 basis points. So you would have gone from -10 to 0.
Yes.
So that was the talk. It didn't materialise, and in turn the yen went just mayhem. And it's been an almighty trade, the yen. We'll talk about it in a second or two, but what a market to look at. So, full of surprises for the Japanese.
Certainly is. And we look at the inflation numbers there. Once again, not big numbers in the whole scheme of things compared to other markets, but you have to put it into context as to where their interest rates are as well.
Yes, we made reference to that, and that's just for our viewers out there. If we use Australia as a test case, we're running at around about 3.5%, I think our bond rate is, isn't it? And inflation's running at 7.5%, so it's a 4% differential. If you're looking at Japan, you're nearly at 4% CPI, and you've got a negative 0.10 bond rate. So the same sort of numbers. The yen, if you look at what's happened, and you'll see a chart in a second, it nearly mirror images what you see as far as bond rate.
Yeah, and it's clearly inflation is going up. You can sort of say it's a low number there, but the chart tells the story.
Well, we had to expect some news out of OPEC on Tuesday, and that happened, and they're not really changing anything. So it's going to be, I think, a demand issue as far as China and what happens with supply from OPEC Plus. And we've now had crude up the best part of 10 or 11% in 12 days. So it's game on for producers. They're happy.
Yep, certainly is. Now we look at the yen, and we also look at the spread there.
Yeah.
tracks one another, basically.
It does, absolutely. You know, you put your mind back nearly to the year, we were at 114. So if you go back a year today, so let's go about the 20th of January last year, we were at 114 for the yen. And then we went to 150. So that's just almighty. For anyone to say currencies don't move, this is against the US dollar, then we had that intervention, as it says there, and it capitulated and currently trading at 128. If you traded one market, and one market only, Mrs. Watanabe, US dollar yen, give the game away, just traded that one over the last 12 years, last 12 months, you'd be the happiest trader in the world. And look at if you map that spread between your 10-year, that's where the currency traders need to be conscious of what's happening with bonds, mirror image it, lay your charts over, look at your analysis, and it'll be very, very happy days sitting on the banana chair in the back streets of Okinawa. Hey?
And when does Kuroda, he finishes up, it's in a couple of months' time,
I think he's April.
April, is it? Yeah.
I think so.
So it'll be interesting with the...
He was in Sweden last week with Fed Chair Powell and a couple of the other big hitters, one out of England, of course, the finance minister. So yes, we're expecting a different tone from Kuroda, and he didn't move.
Yeah. US, we had the inflation numbers out last week, so dropped to 6.5, which was expected, and that continually comes down. And then overnight, last night, we had the retail sales, which were down further than expected. So it's a bit of a catch-22, particularly for the equity markets, where they think inflation coming down is a buy.
Yes.
Yet nasty retail sales.
Well, you want those consumers to be buying your goods.
So it turns into a sell, and we saw that overnight in the US markets.
Yeah, that's the fear and the panic, because if that consumer loses confidence or firepower in the sense of what they've got in their wallet and purse, then that really creates that recessionary fears, and how deep does it go? So, have a look at US equities. They were bid off last night. It was the biggest fall, I think, for a month.
Yeah.
So let's see where we are come... Today's Thursday and Friday. We've got 2 more days to go.
Yeah, and it's been a pretty positive start in the US. The equity markets for the first few weeks of the year.
Yeah.
So
you didn't want to be bearish the first 18 days.
No, it wasn't crazy buying by any means, but it was very consistent over sort of a two and a half week period. Yeah, very much so. Finally, let's take a look at the US 10-year. Down considerably once again on the back of those retail sales numbers, but that was around sort of 353-ish.
Yeah, we spoke off air together, and you've been involved in these markets for bloody decades. But the point I want to make is, as you said, that down 0.162, the bond traders overnight would have been a gala event. To see that sort of movement is nothing short of mind-blowing. And that's a big sell-off, that.
Certainly is. And that's right across the yield curve as well. Whether or not you look at the 2s, the 3s, the 10s, you can see that yield curve certainly coming down, which plays into the whole interest rate story, and the consumers are starting to feel the pinch.
Oh, yes, absolutely. Yeah.
I know. So where they send these interest rates to in the States, they reckon there's another 75 points there.
Yeah.
Is that too extreme now?
And how aggressive are they going to be?
Yeah.
In the sense, is it going to be a 75, a 325s, a 50 and 25? We don't know. We sit here and wait. But there's a lot to consider from Fed Chair Powell and his gang. Yeah,
I suspect I reckon they'll do a 25, and then they might pause for a few months to get a bit of a feel of how
confidence and sentiment.
Yeah, how much pain there is out there.
Yeah, absolutely.
Time will tell. Excellent. All right, Pete, thanks for joining us.
God bless, Andrew.
Catch up again next week.
Look forward to it.
Excellent. And that's the XM.com weekly market update.